Almost a year after Dutch venture investment fund Prosus asked its director on the board of its investee company Byju to step down, it has taken the inevitable decision: write off its entire investment of $563 million in the edtech company. In a damning statement, Prosus said, "We have written down Byju primarily because we have inadequate information on the company's financial health, liabilities and future outlook." That means it's just a matter of time before other investors too write down their investment value in Byju to zero. After all, they will now be hard-pressed to explain how they see value in Byju when other co-investors have come to the inevitable conclusion that the Byju story is over. Reports and informed sources close to the founder Byju Raveendran have confirmed that the billionaire founder is now residing in Dubai and India doesn't have an extradition treaty with UAE, which means Byju may never come back and may never be forced to answer tough questions. He can continue to operate through lawyers. Had Byju Raveendran, his brother Riju Raveendran and wife Divya borrowed money from an Indian bank and then diverted it to some company and defaulted on repayments like they've done in the US with Byju's subsidiary, Byju's Alpha, they would have been under investigation by the CBI for fraud. Now that begs the question: don't foreign investors deserve better risk protection here in India? At least since July 2023, Byju's investors have been fighting to oust the promoters. Their call for an EGM or extraordinary general meeting to vote on ouster of the founders was dismissed by Byju on the grounds that the shareholder agreement did not give investors the right to change the company's chief executive or even the management. Legally, this is perverse and blatantly against the interest of shareholders. Experts are of the opinion that any provision of a shareholder agreement that is contrary to the Companies Act 2013 will eventually be struck down by the courts. As per the Companies Act, any shareholder group with at least 10% ownership can call for an EGM or a vote to remove a director as well as initiate proceedings of oppression and mismanagement. And this is exactly what Byju stands accused of by its institutional shareholders. The only small win for investors like Prosus has been that the NCLT order of June 12th, which blocked Byju's access to $200 million it raised via a rights issue, which valued the company to a minuscule $20 million compared to its historic high of over $22 billion as recently as in 2021. The investors have alleged that this was done to dilute them out of the company. The court has directed Byju to park its proceeds in a separate account until the main petition filed by the consortium of investors, including Prosus, Peak 15 Ventures, Sofina and General Atlantic Singapore, is heard and a verdict is announced. What NCLT needs to do now is fast-track the main petition so that whatever value is left in Byju and its subsidiaries can be salvaged by a non-founder management. It may well turn out that in aggregate, there's not much left to salvage. And that would truly be astounding for a tutoring company that has raised $5 billion, a whopping 41,000 crore rupees at today's rupee-dollar exchange rate. In the end, the most valuable lesson that Byju may have taught, not its paying K-12 students, but students of management, is how not to run a startup.